Gold slumps as traders take profits and trade fears ease. Japan has a new Prime Minister, and Australian consumer confidence recovers slightly as the RBA keeps a close watch. That's coming up in our 5 Things in 5 Minutes on Wednesday, October the 22nd. And then in our deep dive interview, Austrade CEO Paul Grimes talks about the potential for Australia to have deeper trade connections with Southeast Asia.
The IMF projects that Southeast Asia will be one of the fastest growing parts of the world through to 2030. So it makes sense to focus on a part of the world which is growing rapidly.
But first, in 5 and 5 with ANZ, the gold price slumped overnight, was down over 6% at one point as traders took profits and as fears eased around the US-China trade tensions. Meanwhile, Sanae Takaichi yesterday became Japan's Prime Minister, following weeks of negotiations. Here's ANZ FX analyst Felix Ryan on what that could mean for the Bank of Japan.
We have seen from Takaichi previously that there is a preference for the BOJ to go more slowly on policy normalisation and keep things accommodated for some time or a bit longer. That does reaffirm it at the margins our view that the Bank of Japan are on hold until January of 2026 at this stage. That comes even though we are still seeing some dissent from some Bank of Japan board members. Of course, this week we had Takata, again, one of the more hawkish members of the board, arguing that the time is ripe for a BOJ rate hike.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 was up 0.2% and the Nasdaq up 0.1%. The yield on the US 10-year Treasury fell 2.4 basis points to 3.961%. West Texas oil futures rose 0.7% to $57 US a barrel. Gold was down 5.2% at $4,132 US dollars an ounce. The US dollar index rose 0.3%. The Aussie dollar fell 0.35% to 64.92 US cents. The Kiwi, meanwhile, was flat at 57.42 US cents. Number 2. ANZ Roy Morgan's Australian Consumer Confidence Survey improved by a point last week. ANZ economist Sophia Angala says the 4-week average still near a 12-month low, though.
Last week's rise was driven by improving household confidence in their economic conditions, and particularly this was supported by a bounce in the 5-year economic outlook. But notably, this does follow a 15-year low last week, so a bit of a move upwards there.
Number 3. Sophia says the Reserve Bank of Australia has been keeping an eye on consumer confidence levels lately, with Assistant Governor Sarah Hunter noting last week that it was at a relatively subdued level.
We did see some upward momentum in consumer confidence over the second half of 2024, supported by stage 3 tax cuts flowing through to household disposable incomes. But that upward momentum has been softened so far this year, and that could be due to global uncertainty weighing on household confidence and also more hawkish commentary by the RBA recently. Overall, we do see that solid income growth, a rising housing prices, and also that RBA rate cut that we expect in February of next year to support some upward momentum in the consumer sector over the coming months.
Number 4. New Zealand's seasonally adjusted goods trade balance was a surplus of $400 million in September, the largest since 2020. ANZ senior economist Matt Galt says there were strong export volumes and prices, while subdued domestic demand kept imports restrained.
It gives us a few insights into Q3 GDP. It's only a small window into it. We did see goods exports volumes increase on the quarter by about 2% for primary goods exports at least. So that's a positive for Q3 GDP, and the improved trade balance will support income growth for New Zealand as a whole.
Number 5. Malaysia's economy reported bumper third-quarter growth at 5.2% from a year ago, stronger than economists' expectations for about 4.2%. It was driven by strength in mining and quarrying. ANZ economist Arindam Chakraborty says there are signs of softening ahead, though.
Intermediate goods imports fell for the third consecutive month and PMI export orders weakened, suggesting domestic exports may slow. Given the strong Q3 performance, we have raised our 2025 GDP forecast to 4.5%, slightly above the midpoint of the government's forecast range. But with tighter fiscal policy in the 2026 budget and export risks, growth is likely to moderate next year.
Arindam Chakraborty there. Now, in our deep dive interview, I talked to Austrade CEO Paul Grimes about the potential for deeper trade connections between Australia and Southeast Asia. We spoke on the fringes of last month's AFR Asia conference in Sydney.
Yeah, so one of the key themes is how do companies deal with risk in a world where there's all of these global tensions and then tariff changes, particularly in the United States, but the knock-on effects that that's having, and looking for the opportunities for our businesses to be able to grow new markets and to expand. And what better market to be focused on than the one that is so close to us, Southeast Asia. Southeast Asia was a country, by 2030, it would be the fourth largest economy in the world. You know, it is a vast market just to our north. We're very, very close and growing very, very rapidly. So there's real opportunities there for Australian business to be exporting more and to be investing more in Southeast Asia.
Yeah, paint a picture of the potential growth in those economies and what types of products and services that growth creates, that sort of demand that people should look at.
Yeah, so the IMF projects that Southeast Asia will be one of the fastest growing parts of the world through to 2030. So it makes sense to focus on a part of the world which is growing rapidly. As Southeast Asia continues to grow, that will open up all sorts of opportunities for our exporters. In agri-food, for example, changing opportunities for new food exports, new products into Southeast Asia. Also, as we see supply chains remaking themselves, that's going to open up opportunities as well. Those Southeast Asian countries are dealing with some of the big global challenges themselves, just as we are here in Australia. And really, foremost of those is the transition to net zero, the clean energy transition. There's great opportunities for Australian companies of all sorts to be contributing to Southeast Asia's own work to manage the transition to net zero by 2050 and beyond.
Earlier in the conference, the Minister talked about how for a lot of Australian exporters in the past, they flew over Southeast Asia because, you know, there were ready markets willing to buy products in South Korea, Japan, and then China. Are Australian businesses set up, tuned for these Southeast Asian markets, which perhaps are more disparate, obviously at a different stage of development? Are there different types of skills or things needed?
One of the key insights is that from this conference and the discussion so far, is that there's much more to be done. We need to keep working at building our capabilities and indeed our understanding, our cultural. It was one of the things that was called out early today, the importance of building cultural capability in Southeast Asia, understanding the differences between the different markets. Doing that work, building those relationships is so important for Australian business going into those new markets. Something that was drawn out in the discussions today that I thought was really interesting is the fact that we have a very diverse population here in Australia and making sure that we harness our diversity as a key national strength.
Paul Grimes from Austrade there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, October the 22nd. Catch you tomorrow with a rate decision from Bank Indonesia. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.